Good morning, traders. This is Chris Buss with Traders Profit Compass. I want to welcome you to Before the Bell. In this video, I do my best to set you up for success by giving you actionable content to help you trade better, find objective levels to trade, and have a good day of trading. So let's get started. It is 6:30 as I'm starting the video. For newcomers to the channel, welcome. Please run the video at 1.5x. And I think you'll really like that speed. So taking a quick look at futures, got a lot of red on the board this morning. Bitcoin's down 3%. Large caps 1.2%. NASDAQ 2%. Small caps 1.2%. Oil is up 1.7% every day. Up. Copper's down about 0.5%. Looking over on macro, not a whole lot today. We've got Empire State Manufacturing. And then we've got a housing market index, I believe it's at 10. Looking over on earnings today, we've got a bunch of banks. We've got Goldman, PNC, Truist, and we've got Schwab in the broker category. I think that's going to be an important one to watch just as a first earnings out of the brokers. And then after the market closes, we've got interactive brokers. So you may be able to get a read on Schwab, get a read through to interactive if you want to try and do something there. If you get a big reaction on Schwab, you're probably going to see that on interactive as the day rolls out. And we've also got our first trucker, JB Hunt, after the bell as well. That will give a good read on trucking. So on Friday, we had the, decent size red open to the day, and they rallied it back. And then, of course, now after the weekend, they take it down again, at least in the pre-market. So we're going to have to be really attentive. We got some pretty critical levels that I want to go through with you here this morning on the indexes and FATMAAN names. So let's get started. Here on SPY, you can see that pre-market, they dropped it down below our channel and below the 50 EMA, but they could not really take out the 50. So, keeping with our technical axioms, nothing good happens under the 50. And really, the SPY has been the last man standing. The Qs are under the 50 already. IWM is under the 200. So we're losing technical levels, and the bears have not been able to close the deal, but they're getting a lot closer, especially if today's red numbers hold. So here on the SPY Daily, I'd say anything under 462.5. Let's see where the 50 comes in. 464 is where the 50 comes in. I'd be very cautious, trying to take longer term bullish positions with the SPY in this posture. And I think on the downside, this 457.50, you can see we had a tag here and a tag here, and then a much bigger level of support is down here at 450, and that was a level that we had identified a long time ago, and that level comes from this $20 range between 470 and 450. And what I've done here on the 2-hour is drop in a trend line from the last time we were down at 450 up through these rising lows. And so you can see where the 50 comes in here in gold. And if we drop down below this trend line, that'll give you a visual reference on, whenever you break a trend line, it's not particularly great, especially if you're a bull. So I would be watching this trend line this morning and also this prior low here at 459. You get below that, we've got a little sliver of a gap here yet to fill, and then we've got another low down here towards 453. That would be kind of like a last chance, if you will. Once you're below 453, I think you come down here to 450, 449 to revalidate this low over here. So we've got some levels to watch. I'd be watching this trend line. I'd be watching 459. I'd be watching this little gap. I'd be watching 453, 453 and a half. So watch those levels on the downside, and don't forget how the market operates. You know, they give you a gap down at the open, and then you've got that the overhead gap that'll be left behind, and then there's always that chance that they gun it, try and close that opening gap, and then roll it over. So if I was trying to actively trade that, mark your gap, you know, heading into the open, and if you get a rally, you can be long for that gap fill, but then close it if the gap fills higher, and then, you know, recalibrate from there, whether they just keep ramping it or they roll it over. So that would be a very objective place to get short once the opening gap fills. But, you know, that's a game time decision. I can't tell you if they're going to, you know, gun the gap at the open or just keep heading south. So that's one of those tricky calls that you're going to have to make, you know, on the fly. And if you're not comfortable with that kind of an open, and that's really, I mean, there's no shame in saying I don't really trade that open really well. I would just wait for levels on the chart to either hold or fail, you know, after that opening volatility settles in. Maybe after 15 minutes or so, give it 3 bars to see what it's going to do, and then hone in on your levels. And here we just have some resolution on the trading that happened on Friday. And what I've done is I've from this high we had back here, I dropped in the Fibonacci tool from high to low, and we see that the rally on Friday, while it might have seemed dramatic in the moment, and certainly a good trade, if you caught it at the lows down here and got the rally, that's a great trade. But in the bigger scheme of things, it was only a 38% retracement of this down leg, and now it kind of looks like a bear flag. So those are the levels that I have. Be attuned to them when you start your trading. Qs. We had this $20 trading range from 400 down to 380. We had the big drop on Thursday. We had the down open on Friday. And then they rallied it back, but you can see that they didn't even recover this 380. And that was our kind of, you know, the bottom of the box. For the bulls to get any horsepower, they got to recover that 380. And you can see that all of our moving averages are turning down. We've got the 8 below the 50 and the 20. And we've got the 20 below the 50, and now the 50 is turning down. So that's, you know, in and of itself, that's a bearish EMA stack, right? The faster ones below the slower ones. And really the last EMA standing is the 200 down here at 363.71 at the top of this gap. So today, I think the levels that you've got to be watching are, well, we'll see the tighter levels when I go to the 2 hour. But below 380, that's got to be at a minimum your demarcation for getting all amped up on the bullish side, and really to get back on the right side of the chart, price has got to get above the 50. And you can see here after this drop, we rallied back into the 50 and that failed. So that's classic bearish action when you drop and then you rally back into an EMA cluster or technical resistance and then it rolls over. That's bearish action. So let's take a look at the 2-hour, and you can see after this drop, it wouldn't take much imagination. I don't have it drawn in here, but you can see, if I were to draw 2 parallel lines around this price action, that it would look a lot like a bear flag. So we've got this 380. I've got it marked as key support here, which it was while price was above, but now it's key resistance, right? Broken support becomes resistance. So now we're going to have the open down here. And I think the key level that I want you to focus on this morning is 372. That was this prior low here. Actually, you've got a low here as well at 375. But really, if this bear flag plays out, it's going to be price is going to be challenging this 372 level, and below 372, not a lot stopping it. I mean, you can see there's actually no volume over price support over here on this chart. So I would imagine that below 372, it would have a free run. I'm going to jump back to the daily chart, get a run towards the 200. You can see that void over here in the chart where you've got a large volume over price level here. And then the next one really comes in at the 200 with not a lot in between. So be really careful on the downside on a break of 372. And I think that would be a place where if that breaks, you would definitely want to be short against 372 with a stop just above, with your target down towards the 200 and the top of this gap. 30-minute, you just see a little zoom in, and you can see that price stopped right at that 380 level where you've got all this trading above that is resistance. IWM, we've been bearish for quite a while. It really hasn't broken anything massive, and that level is 310 with this big trading range that it's been in for a year. But now I looked pre-market and it's trading around 211. Stay focused on 210. I mean, price is below everything, all the moving averages. You can see the bearish stack that's forming. We've got the 50, then we've got the 20 below it, then we've got the 8 below that, and they're all beginning to dive below the 200. And once you've got the fast moving averages below the 200 moving average, then you've got that true bearish stack where all the EMAs have rolled over, with the fastest one being, it's the exact opposite of a bullish EMA stack where you've got the 8 on the top working down to the 200 and they're all rising. Here you see they've all rolled over, with the 200 being flat. But once these, if 210 breaks, number one, if 210 breaks, your downside target is 23 below. That would put it, down at 190, and then all these EMAs will make their way down below the 200, and that would be really pretty bearish. Here on the 2-hour, I had a little double bottom marked in here where this low and this low were equal with some bullish divergence. But that setup will basically be foiled if, price breaks back below this 212 and then breaks below 210. So this was a promising setup for a rally, but at this point, it doesn't look like it's going to play out unless somehow today they take that down open and then rally it back up above these lows. Here on the 30-minute chart, you can see that W formation starting with resistance at 215. Be really focused on this 211.50, and like I said, that's where pre-market price is trading at this time. Facebook, big down open on Friday, and then they rallied it back up to this. I dropped in a trend line, and Facebook has been fighting. But you can see that the bulls have been running out of gas at this trend line with a series of lower highs. Now, the support in general has held all along the way, but that's forming this big bearish right triangle. If you can follow my cursor, here's one leg of the triangle, here's your long leg, and at 324 is the base of the triangle. So you can see it here. So I think the super key level on Facebook is 324. Let's look at the daily chart just to show you that. We have a consolidation range between around 345, and it doesn't show the resolution here. I've got it at 325. I think 324 is the real level, and you saw that on the hourly chart. And notice this big area of value here with the large volume over price bars, and you break below 324, you move into a relative zone of weakness or not as strong technical support, and that would open up another run down here to 305 at the previous low. So I think on a break of 324 that you could be short. Now, if you get, if it opens low and has a rally to fill the gap, I think right in here at 330, you can try a short up against technical resistance and downtrend resistance. I think that's a very objective level to take a short position with a stop just above and see if it doesn't roll back over towards 324. And that in and of itself would be, you'd be $6 to the good. So I think that would be a nice technical setup if you got it. And then you can put your stop just above 330. And if price breaks the downtrend line, you just take it off. Take your paper cut and wait for a fresh signal. But if it keeps going, then I would get short against 324. And there again, 324 down to 316 is $8 of downside potential to revalidate this prior low. Apple, same kind of idea. We had this down move down to support at 171. They rallied it back into this zone here, 173.5, but now it looks like a bear flag, and if they break it back below 172, I think at a minimum they're going to come back to 171, and that'll be a really, really big level. If they can't hold that, I think they're going to come back to validate these prior lows at the top of this gap and the 50 EMA at 168, 50-ish, right in there at the top of the gap. And then it'll all be a matter of whether the top of the gap can hold or if it fills down towards 166. Tesla, I've added a couple of trend lines. I've added this one off the recent high. We had a lower high here, creating this trend line, and I've put in a trend line off of the most recent low down here at 900. We came down to this 1,000 level that we said was important. They rallied it up, but then got rejected back down here, right at 1040. I think the levels to watch today are, one, this trend line, and number two, the level at 1,000. I think below 1,000, it's going to open up 970 and this open gap. If we take a look at the daily chart, if I can pull it up here, we've had this $200 trading range with a big trend line coming in here. And remember those trading principles: if you break a well-defined trading range, then the target is the width of the range. So if there's a decisive break of 1,000, that puts our target down at 800. Now there's a lot of work to do in between. We've got a trend line, we've got an open gap, and we've got the 200 coming in at around 850. So there's going to be some support levels down here, but notice we've got a low down here at 900, and I would expect that on a break of this trend line, you're going to come down at a minimum and revalidate this low at 900 from the other day. Microsoft's in trouble. We had talked about that last week. It's been flirting with this prior breakout level, and we weren't surprised when it held the first time, right? We came down, we tagged it, then there was a vicious rally back up to 320, and then we had that really, really, really bad day on Thursday. And if you were part of the group and involved in it, we had this trade dead to rights here. We had some technical levels on the 60-minute chart that we were able to capture, so that was great. But then came right back down to 305, and Friday they bounced it. A lot of muscle memory along this line at 305. Now, I looked pre-market, was trading around 302, just below. I think 305 is a definite line of demarcation. If you get, any kind of rally back above 305, to fill the gap, and then it rolls over and loses 305 again, I think that would be a great place to be short, because, we've tapped it 3 times. Here, here, and here, held all 3 times. You break it again, what you're doing is breaking the bull's resolve to keep buying it, is, how that plays out psychologically. And then you've got all this area above where all these people realize that they're wrong, right? Because you lost the breakout. Anybody that bought the breakout back here after all this consolidation, if they didn't exit their position, now they're underwater and they want to get out. So I think your first stop will be the 200 right down here at about 293-ish. So watch that 305 like a hawk Amazon has been weak. It rallied back to this 33.15. We had a subsequent pullback. We said 32.45 was your pivot. It rallied back to that on Friday, but could not get above. And now it's down significantly in the pre-market, down in the I think 3170s kind of area. That'll leave a big gap above, but the level that you got to watch is 3140, 3145 at this prior low. You break that one, then you come down a lot further. So I would definitely be short against 3140 if that breaks. If there's a rally to fill the gap up to 3245, again, that would be a objective level to short after the gap fill and right below resistance with a stop above. Google in a little downtrend. It's been pretty resilient. I think right here you've got a level at 27.85 where it closed on Friday, and then you've got an important level here at 27.50 that I would focus on. Below 27.50, I think you're going to come right back here to 28.80 to check this prior low. So I think to get on the bullish side of this chart, it's got to break back above this 27.80 area here, 27.85, and that would open up the door for a run back up to this level here around 28.35. Netflix came right down to our 515 level that we said was important. They announced on Friday, I believe, that they were raising prices in Canada. That caused a big spike in price, but notice that for the most part, they faded that whole move. It had rallied up to 540, and then they sold it back down to 525. So it lost $15 off that spike high. Today, if you got a break below 515, I think you can be short there and then look for 470. Once we move to the bottom half of the box, that opens up the door for a run to the bottom of the box. And you'll also notice that right here in the middle, we've got a large volume over price bar. And if that fails, then you see support falling away and not really much in here to save it. You got a little support here at 480, but still, I mean, if you got short at 515, I think you'd be thrilled with a move to 480 here, and then take it from there. And then lastly, semiconductors. They've been putting up a pretty good fight. We saw the fast move down and then the rally that held in here at 302, and we've spent quite a bit of time between 308.50 and 302.50 right here, and we've got the 50 EMA below at 298. I think that is a big level. Bulls do not want to see the 50 EMA break down. I'm going to show you the daily chart just to show you where we're at. We're inside this $22 trading range. You can see in green where the 50 comes in. You've got a level here at 302.50 and then 312.50 at the top of the box. So just going down from high to low, you've got 312.50, top of the box. You've got 302.50, midpoint of the box. You've got 298, where the 50 resides, and then you've got 290 at the bottom of the box. So if price comes up here and loses 302.50 and loses 298, I think you're coming back down to the bottom of the box, and then that becomes your mega important level to hold for the bulls, or else that opens up the door down to 270 on this $22 measured move. So that's the way I see it. It's going to be, I think this open, this down open has the potential to kind of, give a technical knockout to the bulls, because they've been fighting, but they've been gradually losing ground on these failed rallies where they can't really get any momentum going to reclaim the technical levels that that they need to get on firmer footing. So let's see how this week open plays out. Do they rally it and fill that gap and keep going higher, or do they, once the bell opens, do they gap and go lower? And like I said, if you're not comfortable trading that open, let it settle in, let that vol die out, and then focus on your technical levels, and then you can take more objective trades once that opening 15 minutes of price discovery happens, and just say to yourself, I'm willing to let whatever happens within that 15 minutes, because it's so easy to say, oh, they're going to, that first bar, oh, they're going to fill the gap. You get long, and then they reverse it and run you over. So what I like to do is just, like I say, just kind of monitor it for at least 15 minutes until you feel like you have a direction and a level to shoot against, and then take your shots if you're active traders. So let's leave it there. I hope to give you a follow-up video. I don't know if I'll make it before the bell, but I've got some interesting setups that I want to share with you. Did a lot of chart work over the weekend, so I'm going to share those with you later today, so stay tuned. If you're new here and you like the analysis, please hit the subscribe button, the alarm bell, and the post notifications. You get all my YouTube content. And also jump over to the show notes, and you'll find a place to a link that takes you to the website where you can drop in your email and join our team. That way you'll get all my content morning, noon, or night right to your email box. And you'll also get an invite link to our trading room on Slack, and we'd love to have you there. So thank you for the support. Longtime listeners, I really appreciate it. Please share the link with your friends in your trading group if you think those people would benefit from the analysis. I really support that. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.